Super Mario, or should I say Super Micro Solutions, up 500%. Yes, from a year ago, absolutely ridiculous. From a year ago, around 500% up, absolutely outstanding. This giant global tech company leading the race to the top of the mountain in the metaverse, 5G telco edge. IT solutions, absolutely, with their server builder block, with their cloud infrastructure. Is this company going to take the world by storm? And if you're looking at the share price, you're saying, wowza, absolutely, all day long, baby. This is the stock for you. Absolutely on fire at the moment. Will it continue? Time will tell. In this episode, we're going to look at super micro computers. We're going to do a stock analysis. We're going to look at all the financials, see where they are at. Is the revenue where it needs to be, net profit and return on invested capital for the people that love that stuff, shares outstanding, the free cash flow, and everything in between. We're going to discuss it right here. And if you stay right to the end, you will get the intrinsic value, my friend. Yes, the intrinsic value possibly of this company to look at potential buy points for you as a long-term investor. This is what my stuff is. You may be a different investor, but I could just give you the projections and you can take it from there. Not financial advice. Do your own research before you invest in any stocks. Enter at your own risk, invest at your own risk, folks. Yes, well, let's get to it. Yes, super micro computers. This company is doing well, super well, exceedingly well. And why? Because of the financials. Yes, that's what we're here for. This is why they're in the big games. Yes, in 2022, their revenue was 5.1 billion, and then they've gone boom to 7.1 billion in 2023. Absolute beauty. Yes, absolutely flying to where they need to be, about 38%, something like that. Up, unbelievable. Net profit, this is out of the world. This has been a double up, 285 million. To more than double up, 640 million. Absolutely off the chain. No wonder people are buying into this company. Earnings per share is still and not bad, 18.78. Oh, I mean, at 18.7, and the PE ratio 25.25. So pretty much still a big growth company expected from this company going forward. 52-week range. Well, I'll celebrate with you if you're at the $70 mark, because you absolutely killed it. And now at 497, so absolutely staggering. This company doesn't have a dividend, so we don't have to worry about the dividend play here with this company. Short interest at 10.7%. I found that very, very strange. I don't know where that's coming from. When this company's at the $26.4 billion mark, I'm not sure how that, or 26. I just can't see where they think this is going, where this company is dropping from. But hey, that 26.4 is a smaller size cap company, I guess. Total assets, 3.2 billion, and now it's at 4 billion, so they're doing very, very well. And total liabilities has slightly gone up, 1.7 to 1.9, but that's 50% lower, so I'm absolutely raving about these sort of companies, and some, especially when it comes to total assets and total liabilities. Very good. Long-term debt though, 105 million. But it is down from last year, so that's very important. Free cash flow though, 267 million, but that's down as well. So a little bit of issues from that side of things, but they have been diluting you, folks. Shares outstanding 53 million, but they've been diluting you for a long time, so that's the question. But the return on invested capital with 29%, that's what we like to hear, baby. Yes, at 29%, this is a stock you really need to do more research on, folks. And it could be the stock that really gets you up and going. So, well, what's the positives about this company? Pretty much the same, similar to the negatives. They got all these growth innovations in them with the metaverse. 5G is starting to build. Their service builder block is at the future with the cloud technologies. Simple, there's a lot of competition out there at the moment. That is where, but they are doing super duper well, and the growth of this company could accelerate big time and really take you towards where you need to be. But if you're looking on the downside of it, yes, there's a lot of competition. If Facebook is stronger in the metaverse, that's the end of them. 5G if they get taken by the other. It's a lot of moving parts. Can we have 10 companies in the space? Well, it looks like there probably will be, but there's some people are going to drop at some point. I can see this company, if they don't hurry up and do it soon, they're going to run out of time. But this is a potential company that could be brought out. But they would have to hurry up and do something soon before it absolutely goes bonanzas, because I think this company is going bonanzas right at the moment. So, but yeah, the short interest at 10.7%, I don't understand that one at all. Unless they know something I don't know. If you're looking at all the metrics here, there's nothing much to write home about. You could say the free cash flow needs to go up, but it's not a huge company yet, so I've got no issues. This is really outstanding, but obviously the share's outstanding for a long-term investor been diluted. That's not a good sign. The intrinsic value. So yes, we're going to look at intrinsic value. So I use trade brands for this example. It's very simple. It does the current share price with the earnings per share with a growth rate that you can choose. With the current bond yield gives you an intrinsic value. This is very basic. You do not do any of financial investments just on this calculation alone. This just gives you a simple guide to start looking at maybe if the company is fair value, undervalued, overvalued. That's what it's here for. And then from there, you can make decisions on where you go to forward to do more research before you invest into any stock. Not financial advice. But yes, Super Micro Computer, or SMC. We're going to look at the intrinsic value right now. The share price, the share price 470 can be different to what it is currently, but this is just roughly where it was when time of recording. So 470 and 18.78 earnings per share with a growth rate of 5%. I started getting a little bit excited because even at 5%, it's 362. So normally it can be a lot lower, but it's only 100 off, so I'm not complaining. And if we go 10% growth rate on all these current metrics of 470 and 18.78 earnings per share, we're looking at $558, folks. Yes, it was 60% undervalued. So if you think that's the way it is, it's already 16% overvalued. But if you think it can go to the moon, well, let's continue. Earnings per share now, I've jumped it up to 26 at the same share price of 470. With the 10% growth rate with the current bond yield, you're looking at a $772 stock. So $300 up from here. And if you think it's going to the moon or even beyond this, earnings per share has doubled. With a 15% growth rate, this stock is getting close to $15,000. So there's a 3x from here, folks. So is this company going to go 3x from here? Is it a potential? Absolutely. It's a potential. Whether you're going to have to wait 10 years, 20 years for it to happen, that's probably the question mark you have to think. If you want to wait that long, then load the boat. Not financial advice. This is full disclosure. I do not own this company as yet. Very high price to inclusion for a lot of people out there. So, but if you're a long-term hold and you're not investing in many companies, this would be a good company to buy and look to hold long-term. Potential buyout possibility. I don't know how long that's going to last, but there's a potential there. But yes, that's my analysis of Super Micro Computers. I hope you enjoyed it. Remember to like and subscribe to the channel and share this video with all your friends, and have a lovely day out there. And I'll be back 3 times a week on this channel to give you all the finance you need to learn about stocks. Have a great day out there.